stuff's propping it up. There's like the Fed on one side, there's retail investors getting more money on the other side. It's just like the bigger they are, you finish it up, Skippy.
Well, no. So I
The
mean,
harder they fall is the second half of that you just said.
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
there's always lots of groaning in the morning.
Ugh.
Everything okay over there? You all right? Like having some trouble?
No, it's all good. It's all good. I just like to groan. It's my favorite form of complaint, which is my favorite hobby.
I love complaining.
It's so good.
Yeah, it's like really therapeutic. Pisses everyone off that you're around, which is fun too.
Oh, second favorite hobby. And if you get the 2-for-1 special,
All right, what's happening?
are we going to the fishbowl first? What's on your brainiac?
Oh, we're gonna hit the listener mail because we love the listener mail. And so, I mean, I'm just gonna dive right in. This is a super smart business owner. They basically said Twitter sucks, and why are you guys on Twitter? So we might have to revisit that philosophy.
Wait, hold on. So someone wrote in to us to tell us to get off of Twitter?
Well, no, it just said I at Skippy Doogles is not working for me. So yeah.
Oh man. So is it upping our Twitter game, or is it going to a different platform like Parler?
It's probably like Parler. It's probably a different platform.
Okay, we'll investigate. We'll get our social media team on it.
I know. So here we go. I'll recap at a high level because I think there's so much good stuff here. So he says, love the show. He wants to talk about the merits of having a cash war chest. Like we've talked about that a little bit. And basically, if you would recommend sitting on more cash than is recommended to take advantage of a buying opportunity, especially if we are nearing a bubble. Do you basically go all in with a lump sum purchase if you're looking to invest now, or do you dollar cost average? Although it's typically ill-advised to try and time the market. Just curious about this at this point in time.
You want to start? What do you think? There's a lot. This is hefta.
I mean, yeah. So I have some crazy thoughts here.
Kick it off.
Right. Historically, Vanguard has the best study here, but there's a lot of similar results, right? So historically, somewhere around 66% of the time, you basically make more money by investing the lump sum. The simple, like if we really break it down simply, the reason for that is the stock market goes up more than it goes down, right? So the right move is often a lump sum, but the right move for you could be much different. It could be dollar cost averaging. It could be sitting on more cash. I think about this actually comes back to like a value investment thesis for me in a weird way, because when I'm buying value stocks, I know I'm buying stuff that's discounted. So I know I'm tilting the odds in my favor, and that if I invest the lump sum earlier on, I'm buying stuff at a discount to its true intrinsic value, and I'm going to have a better than average chance of making more money long term. But I'd say it really depends on what you're buying. If you're buying the NASDAQ 100 right now, which Douglas and I have talked a lot about how expensive tech stocks are, I think it's very fair to say you have a greater than average chance of losing money over the next 5 years, at some point over the next 5 years, not like consistently for the next 5 years. So those are the factors I'd really look at. One, just the math is in your favor. If you have a sound investment strategy, whether it's 60-40 stocks, bonds, 100% equities, the Vanguard study that actually is on our Twitter breaks all this down. But two, it's what's your temperament? What are you buying? What's your current concern about the level of the market? Because if all those things are true and you still just can't get comfortable with the current price bubble, well, then I'd say dollar cost average in. It'll probably cost you a few bucks, but that doesn't mean it's wrong.
This is a moment where we can not go with the vanilla Gordon Ramsay. No, hold on. We're not buying restaurants. We're not buying restaurants. The Dave Ramsey approach. Like, you didn't do that. I'm not saying you did, but like there's so much nuance in this, right? In some of the categories that you named. I'm going to frame this not as any sort of advice for people to take, but just like some broad themes too, to feed off of what you're doing. Generally speaking, one should have a long-term investment view. If you have that long-term investment view, then don't care about timing the market today. With the significant caveat, and this is what you brought up in the NASDAQ 100 and also a little bit of the value investing side, is it does depend on what the heck you buy. Because if you're going to throw everything into what is the most expensive thing today, then, I mean, you know, that's a personal choice, but that's different than going into the overall market. And so safest bet, dollar cost average is something broad, but generally speaking, get your money in the market. This is going to go to the Doogles, right? And you're going to start laughing at me because of my various indicators. But as a part of the model that I built, I've been honing, my model does have a proxy indicator for market peaks and a proxy indicator for market bottoms that like Goldman Sachs shouldn't use, right? No one should use. Y'all shouldn't, be using either. But more important than just having that proxy, what I think is important is the first element that you brought up around the investor philosophy, right? Because what those proxy indicators do, because they're going to be inaccurate to some degree, like I know that, but they help me to shape my own mental model. And so it's about when you like want to go in and how you want to go in, because you're not just making decisions for today, you're making decisions on the future. So if today you're saying, I'm going to wait around for the whole thing to bust, at some point you're going to be waiting around for the whole thing to be at the bottom. And you're going to spend most of your time not in the market and most of your time not getting those 10 days every decade that actually make up 60-70% of
you
gains.
Just end up like being pseudo paralyzed with, oh, tomorrow or next week's going to be better. And more often than not, what's going to happen is whatever you're trying to buy is going to be more expensive next week than it is today. I've actually I mean, anyone that's invested for decades has lived through this, but I've lived through this fairly recently. Like, I think it was less than 6 months ago, I wrote, hey, one of the keys of the 2020 investing timeframe was just staying in the market and being patient. And then I know 8 weeks ago, probably, I was going to Doogles like, this is so insane. I want to park my investments on the sidelines, even though I know how stupid that is. Well, I didn't do that. I'm up 20% since then. I mean, it's been feeling irrational for a long time. The worst thing I could have done is park more cash on the sidelines. The triangle here that you mentioned, I just think is so important. What you buy at the valuation you buy matters less if your time horizon is really, really long. But all these things play off each other. So I'd say investor temperament, time horizon, and the current valuation of what you're buying are all key decision makers here. Typically, the math will work in your favor to invest a lump sum as soon as you can invest it with a sound investing strategy.
Boom. Nice.
We love the listener mail. That was a particularly good one. I hope we did it justice because there's so much meat to talk about there. If you have follow-up questions, shoot them in. We'll keep digging into this.
All right. And fishbowl?
Fishbowl.
The hot fishbowl topic this week is stimuli. Am I wrong?
So here's what's happened with government spending in the past 12 months. 1.7 trillion in March of 2020, followed by 915 billion in December of 2020, followed by 1.9 trillion this week. I mean, that is a crazy amount of money. Like, I don't even know how to react to this. And Doogles, I know you're going to walk it through us. I mean, like, Mexico is making money off us because we're just throwing money in the fireplace. It's not, well, I think it's good and bad. I naturally am like a very conservative financial person. And so this just scares me. It just seems like too much. But some of the ongoing themes we've talked about over the last several weeks are actually attacked here in ways that I never thought. Like, there's an expanded earned income tax credit, which goes back to the Joel Greenblatt book and will be a really interesting case study long term. At a high level, like, let me just break down where some of this 1.9 trillion is, and then Doogles jump in at any point, right? You have 410 billion go to stimulus checks, 59 billion for small business, 56 billion transportation, 360 for government. That's a lot of state government subsidies, 176 for education, only 123 that's directly related to COVID, 16 billion for agriculture, unemployment programs expand by 246. I mean, this is a wide ranging spending effort here. It's crazy.
Yeah, it's a. I mean, there's like a political economic agenda folded into these bills, which
Yes,
like
yes,
there always
yeah,
is. But I think there's more in here from like just Biden's broad philosophical like take. But yeah, this is huge, so huge. And the $1,400 checks, are fulfilling that promise of getting to $2,000 that
yeah.
that was given last December. Which I can't remember if we covered this or not before, but I've been read a few things over the past couple of months, as I'm sure you have, around like how that money was spent, how the last stimuli checks are spent,
Yes, yes.
and I'm going to be really interested. You have to break this down by demographics, both age, socioeconomic, and otherwise, as to how much ends up going back into the market, right, and how much ends up going as quote unquote relief, right? Because it seems like that's pretty split.
Yes, I completely agree. And I think this is going to be incredibly fascinating to watch how this
Yeah.
money gets spent.
Yeah, I think it's going to be interesting. The market piece. I mean, retail traders right now are like a significant portion relative to history, right? As a part of the market, it ebbs and flows. Stuff is propping this market up, right? Depending on the asset class you're going to. We're talking about U.S. equities, especially growth stocks. Stuff's propping it up. There's like the Fed on one side. There's retail investors getting more money on the other side. It's just like the bigger they are, you finish it up, Skippy.
Well, no, so I
The
mean,
harder they fall is the second half of that you just said.
uh, I know this is an investing show, right? Like, and we talk a lot of business and sometimes we talk a little politics. I keep thinking, like, what is the investing theme that you might be able to take from this much money being spent? But I don't know that it's predictable. I think there's too much uncertainty with where we stand in the recovery, what the virus rollout looks like, if there will be another scare post 50% of the population being vaccinated. Like, I really don't know that there's an investment theme to be made, but I think it's interesting and important to be aware of.
Yeah, I mean, there's not necessarily a prediction, but the obvious ones I think are what we just talked about around retail, and then the other one's inflation, right? Those are like the two that you
Yeah.
you could pull out with people being frightened of inflation, which look, who knows? Like you never know what's going to happen because of the systematic nature of the economy. But the Fed has tried to maintain 2% inflation and has not been able to. So the fear of something that's like runaway inflation is I'm not going to say it's unfounded completely because you just never know. We're not. There's nothing that's showing us that inflation should be something that we should definitely fear. Keep an eye out for that. And I'd especially say because what didn't make it in here, right? One of the quotable notables that wasn't in
Yeah.
here was the minimum wage increase, right?
Yeah.
And somewhere Bernie Sanders is sitting with his mittens all agruff. That means upset. Yeah, but that didn't make it in here because what's one thing that's been missing is a wage inflation from any inflation that we've had. And so that doesn't seem to be like a significant concern, at least in my eyes right now. But we should definitely keep an eye on it. But those are like the two kind of themes there that I would say you can pull out. But generally speaking, just getting our economy a strong foundation again is a little something something. Oh, let me throw out one more thing. Sorry,
Yeah.
because I'm sitting on the soapbox, but now I'm going to stand up like a champion. The other thing is, as we've talked about before, even if there was additional inflation, not runaway, right? But if there was additional inflation, the amount of debt that's sitting in this country right now, something else we've talked about,
Mhm.
and assuming that there's productivity growth, right? With that inflation, it could help because the value of your debt, or sorry, the value of the dollar relative to debt, right, is advantageous in periods of inflation when debt isn't crazily increasing more and there's still productivity. I'll sit back down.
Gosh, are you taking me like back to macroeconomics? I mean, are you talking about government basically inflating their way out of debt? Or are you arguing for the people?
I'm even saying
So
people.
yeah, interesting.
Yeah, power to the
I
people.
think, I mean, I'm not here to sound the alarm on inflation by any means, but I think when you spend or allocate $5 trillion effectively in the past 12 months, when your typical government budget is more like a trillion or two, if I remember correctly. I mean, it's very greatly in the past 5 years because we've always been fighting some crisis. I mean, we make up a new crisis to fight endlessly to find a way to spend more money. But yeah, I'm ready to say we won't have a hard time hurdling that 2% inflation target here in the next 3 years. I think it's gotta show up.
Yeah, I mean, probably. And at least at that, it's not runaway. Like we're not talking double digits there. So hopefully, the one thing, because to what you were saying, like we can't predict. The one thing we do know is that we're in unprecedented territory. Like there's no from a debt, and stimulus perspective.
Yeah.
There's no benchmark for us to look at or kind of build off. So we'll see.
Yeah. What else is
The
in the fishbowl?
Oh, before we pop off, you mentioned this briefly, but on the Mexican GDP side, because I do think I think this is interesting. But one thing that I found that was really interesting that I saw in Bloomberg was the U.S. stimulus in 2020 contributed more to the increase in Mexican GDP than Mexico's stimulus package by an order of magnitude. And so, if we talk numbers, the U.S. stimulus contributed about 3.5% to Mexico's GDP growth in 2020. Mexico's stimulus contributed less than 1%, I think less than 0.5%. Like that's insane. And part of this is a growth in remittances. So people sending money back to their home countries. So people in the U.S. getting their money, sending it over to Mexico was a significant contributing factor to Mexican GDP. So, I mean, just the U.S. is just, America, right? Just fueling the world's economies accidentally.
Well, there's another
we usually destroy economies purposefully, but now we are accidentally
we've been
fueling.
spending money all over the world for decades. I mean, like we never have to pay the bills. It's just fabulous. But you missed another piece. I think that the Mexican government has taken a very conservative approach to the stimulus. I mean, they really haven't added much to the economy. So that in contribution to how much bigger the U.S. economy is, and therefore the stimulus checks. Hey, yeah, let's share the love, though. I'm all for this, right? Let's give Mexico some cash.
It's one thing that's I'm going to drop a piece of reading that no one should read. So I'm leaving I don't know what you call a recommendation that isn't a recommendation.
Yeah.
But mainly because no, yeah, sure, I'll take that. Why not? So Milton Friedman, many moons ago, he left us about 15 years ago, but back in the 60s, wrote a book about the history of monetary history of the United States. And there's a chapter in there, The Great Contraction, that walks through 1929 to 1933. And it's basically just saying, like, the Fed, come on, Fed. Like, do you not know why you were created? Right. Which at that time, they kind of didn't, to be honest. They hadn't been around that long. But it walks through, like, in a line by line fashion, like the history of what happened during those 4 years. It is fascinating. Anyone that is listening to this podcast will fall asleep by the end of page 1, which is why I'm not going to say it's a recommendation. But if you are just economics wonk, like, read that, The Great Contraction. They pulled out that chapter as its own solo book. It's really interesting. I found it most interesting to contrast, like, what we've been doing over the past 12 years to what happened then. And so anyway, that's a non-reco.
No, I mean, here's another
one
on that. I think it's chapter 13 of Business Adventures with John Brooks.
That's a great book. That's a great book.
Yeah, I mean, you'll probably fall asleep, but if you're hardcore, if I remember right, chapter 13 is on monetary policy, and it's super interesting. So there's some homework that is recommendation, non-recommendation on those
exactly.
Fronts.
This was one of those times where it made the wife be like, why did I marry you? Because I finished this book. I finished it this week, and my what it led me to want to do was go back and read my economic history of the United States textbook. Like that, I was like fueled to consume more of this. It's just, I don't know. The macro is phenomenal. So anyway, all right. Let's wake back up.
I'm starting to get really concerned. I mean, so I have an economics minor, and you're much a bigger economics nerd than me.
I think the mix of economics and finance is great, from the macroeconomics to think about how systems work, and then the finance to, like, get into the nitty gritty. I just think it's a great combo. I love that stuff.
Those are the fictional narratives that your brain needs to feel in control.
I feel like everything I tell you, I believe you call a fictional narrative.
Yeah,
I'm not saying it's not true. I'm not saying it's not true, but anyway. All right, back into the fishbowl.
I mean, a non-fictional narrative is what's how you were right about Jack Ma. You want to hit that?
Oh yeah, flight logs.
Flight logs and CEOs of his companies resigning and who knows what else
Oh, go
after
for
the
it. Go
halted
for it, man.
IPO.
Go for it.
No, I
Jack Ma,
mean,
where are you?
so months ago, probably Douglas was on this. I thought he was absolutely crazy about Jack Ma hadn't been seen, and this was after the Chinese government effectively took his IPO off the shelf pretty much. So he was slated to be, I mean, Mark Zuckerberg plus Bill Gates of China. You know, like
Plus Bezos.
yeah, like he was going to be the man in terms of business genius, incredibly wealthy, everything. And it just all halted. Basically, the IPO stopped abruptly, and then he wasn't seen. And then he was like, his picture showed up in a massage parlor or at a golf course or something crazy. Do you remember the details?
I think it was a golf course. I didn't read about the massage parlor part. I think it was a golf course.
Let's go with golf course. I got him confused with Robert Kraft, you know? And then, and then somebody is it New York Times tracked down his flight logs, and apparently like he's on the move a little bit. This is just the most bizarre story. I don't even know what to think about it.
Yeah, I mean it shows that he's been behind the scenes. Or when I say behind the scenes, like very, very front and center, like in person in Beijing with a lot of the Ant Group negotiations, but behind the scenes from the public light. He's been flying around his public jet. I fly around public jets. He does not. He's been flying around in his private jet, back and forth, largely between Beijing and a resort. And he slowed down his travel. I love how this said that his like travel is slowed down considerably because he used to fly on average every 3 days, and now he only flies once a week, which like I don't know. I mean, I guess relatively speaking, sure, that's half as much, but that's still an aggressive amount of travel for someone that's been off the grid. So, but he's a part of all these negotiations. So he basically goes to the beach, sips on his Mai Tai, which explains, by the way, why his local bar hadn't seen him, because he's at the resort getting them. He's probably got the all-inclusive package at the resort, and then he goes to Beijing to negotiate. That's all he does with his life.
Oh, the all-inclusive package.
All right. You got Fishbowl? Or you want me to dive in Fishbowl?
Did you see, we were making fun of MicroStrategy. Did you see Square is buying tons of Bitcoin? And we were both saying how we like Square. Like,
it's the beard.
It's gotta be the beard, man. That makes me like Square
bad ideas
a lot less.
Bad ideas get stuck in the beard. And then he's like, well, I mean, that crumb's been sitting there for a couple of days. Might as well eat it.
They did something else that was really aggressive. Who else did Square buy? Like, Tidal, Jay-Z's streaming service.
Yeah.
So streaming services are like a guaranteed way to lose money. Basically.
This is going to be their next caviar.
This is a dumb purchase.
Bad ideas getting stuck in the beard.
Yeah. Okay. So here's how it goes. Mr. Dorsey and Jay-Z began to discuss an acquisition a few months ago. Like, this is just people, they just wanted a reason to have a Zoom call and they burned $300 million. That's all that happened here. So
I bet Jay-Z, or they should call him Mr. Carter if they're going to be respectful of Mr. Dorsey. Jay-Z called up Jack and said, my friend Dreyfus got $1 billion. Can I has $1 billion? That was it. And Dorsey's like, no, but you can have 300 million. Like, it's not a big deal.
Yeah, Dr. Dre. Remember when Dr. Dre on the Beats acquisition went out and drank too much and told everyone, and then the deal almost.
You make that sound like he was knitting at home, heard about it, and then went out and drank too much. He was already drinking too much.
Dr. Dre.
My first concert, I went to the Up in Smoke tour, right? And did you remember that tour?
I remember that tour. Yeah. Yes.
So it's basically the Death Row Records like had a tour called Up in Smoke. On that, very excitingly, great concert overall. Very excitingly, they were going to do Regulators, which has Warren G and Nate Dogg, right? Warren G spitting hot lyrics.
Nate Dogg, rest in peace.
Rest in peace. Nate Dogg coming out with his Philharmonic vocals. However, only Nate Dogg came out because Warren G was getting too cranked in the back. And I was like, picture Regulators with only the hook and then 2 minutes of silence.
They didn't have anyone else jump up
No,
there?
no, it was just Nate Dogg.
And Nate Dogg did it. What? He just like sang it. He just like
He just sang it and then silence, and then sang the hook again, and then like.
And you're like trying to jam to this. I mean, is the crowd like throwing stuff? Like, what's happening?
It's ridiculous. It was so ridiculous.
I've been to plenty of those type shows where, like, I mean, I could think of times where like Snoop is stumbling around, not really putting his words together so great. No offense, Snoop. I'm not trying to talk trash. But like, someone's always attempted to perform the show, right? To just have someone not show up.
No try.
It's the greatest thing.
No try. What else is in the fishbowl?
Oh, I thought you had one more for us.
Okay. So something that for a few years I believed, I'm not going to say this is like a crazy theory because many people probably believe it, but I believed. And I found this article this week that I thought was really interesting, is that at some point, so we have this this huge surge over the last 20 years or so in software engineers, right, being like the hot commodity when it comes to employment, right? High pay, scarce resource, et cetera, et cetera. I really think that we're going to end up in a place in the not too distant future. I'm going to call it a decade because that feels like a safe amount of time for anything to change, where things move to a much more low code, no code type of situation, where it doesn't mean that you don't need software engineers by any means, but it means that the work that they do is much more specialized, whereas everything is kind of built on software today. And I think that no code, low code future I think we're going toward it. I think it's fascinating. I think it's meaningful when we think about the types of businesses that will be successful in the future and where businesses come from today. You following so far?
Yeah, it sounds like you had a bad week programming and you're just ready to throw in the towel.
So this is another fake narrative I'm telling myself.
No, keep going.
Yeah, I have bad day programming. I'm like, oh, we don't need code. Who needs code?
The future is no code.
So you sent me this week, which I think feeds into this too, this article about Zapier, which is a company that basically it's like I'll call it an if this then that type of company where you can use low code. So you can use their software to say, if this action's taken on my website as an example, then please do this action without me having to code it all. You can just do it through Zapier. I haven't gone deep into Zapier, used it very deeply, but how I have used it, which is this is a very layman's use case, is there have been a couple of occasions where I've wanted to make sure that if a certain email came in, I acted on it really quickly. Yeah. And so I've used Zapier to basically say, if an email with this subject line or from this person comes in, can you text me? And so that's like something that Zapier could do like from a layperson's basis. And so they've basically built out this like massive, from a valuation perspective, organization with very little funding. Is basically what you sound over to me, which I think is really interesting. And so Zapier is a version of low code, no code. There's also this company called Composer. Have you heard about Composer?
Just briefly.
Briefly, yeah. So, it hasn't launched yet, so it makes sense. But it's tying this back to investing. The theory that the people at Composer have is that right now we spend too much time having to wrangle like the portfolio performance and using a whole bunch like Excel spreadsheets to calculate portfolio performance, and we spend too much time on the execution of trades. And the creativity, the beauty and the creativity of investing is in the investment strategy itself. And so they want to make it such that in a low code, no code way, you can build out investment strategies, right? And then they handle all the APIs on both ends to execute your trades and also to, according to that strategy, and also to like reconcile from your multiple brokerages and whatnot, all your performance, which components of all of that, I think exist out there. The way that they're talking about it feels very different because they're not just talking about like you've got Charles Schwab and Robinhood, but what they're talking about is if you got NFTs and you're trying to buy artwork and you've got your Charles Schwab brokerage account and you have your, right? Like how do you start to execute between all of those according to your strategy? And how do you use machine learning to figure out what maybe your strategy isn't doing today it should do in the future? They haven't launched yet again. So this is all at this point like it feels, at least from a reader outside in, like pretty theoretical and ideal state go forward. So I'll have to see what the software actually looks like. But I thought that was a really interesting, like another take on the no code, low code. You look quizzical, skeptical,
No, this is just
maniacal.
there's such an interesting ebb and flow here between I think of it as like technical, non-technical work. So you go back to the web, the early web, when you basically had to learn HTML and your other languages to actually build a website. And then the GoDaddies and the Squarespaces all made that super simple. And then the analytics got built on top of that super simple, again, like WordPress site. And then the analytics initially, you would like were placing your own tags and using Google Analytics, and then that got all built and automated and built it. So this cycle just, I mean, it's never going to end, and it ebbs and flows. I don't like with the composer use case you're talking about. It sounds overly complex, and it sounds like they're trying to accomplish a lot that would make a strategy complex. Maybe they make it all simple and easy to use. But I get these concerns about this black box thing, like, oh, we're just going to handle this, and this. And it's like, well, I actually need to understand how this thing works.
Yeah, that's, I think, to your ebb and flow point, which is a great one. Like that's kind of what happens, right? With these ebbs and flows, like there's a black box created somewhere. A black box around your money is like a different kind of thing. Composer may not be it, right? But I think the concept to me is interesting because it's almost like an unbundling, I'd say, of like Wealthfront, which you've talked about being great, right?
Yeah.
Where like Wealthfront, you say, here's my $100 or whatever amount you're giving them, and then they're like, okay, we're going to figure out what the best ways, according to what you've told us your risk profile is, et cetera, to invest that. And with this, at least the way that it's described, it sounds like to me, I'm going to give you my investment strategy. Like I'm going to spend all my time on the strategy, and you do all the stuff that Wealthfront does to execute on that, right? But I'm going to give you what my strategy is. I don't know if that's the way it ends up being executed, but that's like that is, it's just, there's something interesting there, and maybe a V2, V3, V4 of this evolution.
Yeah, it's super cool. I'm pessimistic here because I've been down this road, specifically in the finance world, with multiple brokerages now who have had like really cool ideas, who have eventually gone bankrupt and sold me, their client, downstream. So that happened to me twice in the past year, where like motif investing was one of my favorite things. It's kicked off in like 2013, and it basically allowed you to build a custom mutual fund that other people could buy, that could track performance. Like for its time, it was so far ahead of the game, and I had all my performance tracking and management in there, and they raised tons of money, and they went bankrupt and sold assets to Folio Investing, and then Folio Investing got bought by Goldman Sachs, and I've been kicked around the curve. So with Composer specifically, I almost want to talk about it in the non-investing sense, because I go, that sounds pretty cool, but I'm not putting my money there because I don't want the hassle of dealing with in 3 years when this is no longer in vogue, if that makes any sense. But that's just personal bitterness on my end.
Yeah, I get that. Fool Skippy once. Fool Skippy twice?
Yeah, 3 times.
You won't
4
be fooled
times.
again.
Yeah. At the higher level, I mean, like, is there an investment thesis here? How do you really see this playing out?
The themes basically being no code, low code future. I think broadly, I think it's really interesting. And there was the article that I've like alluded to a couple times, but didn't mention, was one that was called Excel Never Dies. I found this article to be so fascinating from the low code, no code, low code perspective, and from like the unbundling, rebundling perspective. And so I'll for those that want to go read this, which will be, I think there's 100% overlap in the Venn diagram between the people that went and read my housing contagion article, the 150-page Harvard article, and the people that are going to go read the Excel Never Dies article. But it's basically about the unbundling and the inspiration that Excel has caused, and how Excel as a platform or as a program is like will be everlasting. And so I'll give a couple high level points, and then I'll pull out a couple of takeaways that I do think relate to investing that I had from it. One is that Excel has a usability and flexibility that allows people that don't understand the programming behind it to be able to use it. That's the usability part. And the flexibility is the creativity that you can have from it is virtually endless, right?
Mhm.
And so part of this article was talking about the businesses that have stemmed from an unbundling of Excel. I'll give like a few examples here, because Excel was I'll give some. I hate to do this to you, but I don't because I love it. I'm gonna give a little bit of history first. So basically, the history I'm gonna talk real fast. I'll get through it quick. The history of the spreadsheet itself was there's this company called VisiCorp that started a product called VisiCalc back in the late 70s, and then that I think got bought by a company called Personal Software. But that was the start of like the spreadsheet being used by, I'll call it quote unquote everyday person, not as everyday as today. Mitch Kapoor ended up being a product manager at this company, at Personal Software, and then he one day was like, "Look, I got a better idea for all this stuff." And back at the time, back in my research days, I studied this as a case study, and it was fascinating. So Mitch Kapoor basically said, "I've got this idea to make this better," and they were like, "You can't pull that off." And so like a bunch of hooligans said, "So we'll just like you go off on your merry way, and we're going to allow you to create a competitive spreadsheet program to ours. Like we're going to carve that out of your non-compete and go do it." He launches Lotus, and Lotus 123 being the software, which exploded from the beginning. Like within a year, it was like over 50 million, $100 million in revenue or something like that. Public. The rest is history. Mitch Kapoor and Frida Kapoor, fantastic people doing great work in both the DEI space and inclusivity space today, and have some hot investments, Kapoor Capital. Anyway, so that was the first history of the spreadsheet. Then you got Microsoft, right, that comes into play. What Microsoft did that was fascinating was they had this Odyssey team, and this Odyssey team basically went to create this spreadsheet. This was their second attempt at creating a spreadsheet, but the Odyssey team was creating a spreadsheet and decided to launch the spreadsheet where? Where did this program launch? Yeah, you'd think it'd be MS-DOS, wouldn't you? You'd think it'd be MS. Yeah, but they did it on the Mac because they needed the GUI, because the Mac had the GUI type situation. So they launched on the Mac, had success there. Then GUI being graphical user interface. Then Windows came out, boom, Excel we got today. So anyway, skirt, let's get back. So that's a little history.
I mean, how did this, I'm just over here contemplating my life. How did this go wrong? This podcast is about Excel, and I love Excel.
Oh, how'd the podcast go wrong? Well, you made me a co-host.
There we go.
So anyway, but when Excel was created, right, the thought was that this is going to be an easier way to have like your accounting and your charts and stuff like that.
Yeah.
But basically, people have been using Excel in all sorts of crazy and creative ways. You've got some of the things that were listed in this article, which I thought were great, was use it for like HR and payroll, use it for finance and accounting, use it for sales, use it to be a project management tracker, use it to be like as your calendar, right? Use Excel for all this stuff. And then the unbundling, where that comes from, is that people are saying, okay, Excel isn't really built to do exactly this, although it's flexible enough for us to do it.
Yeah.
So instead of us continuing to use this as our invoicing system, I'm going to create a product called QuickBooks, right? That's specifically for invoicing, right? Instead of using this to track my customers, I'm going to create a product called Salesforce, which is specifically, right? So it's the unbundling of Excel to launch these phenomenal businesses.
You know, how many people have you run across in your professional career that like aren't particularly good users of Excel that basically only use Excel for every task?
Yeah.
Like,
yes.
I mean, like they
people
make their stupid calendar, you know, the antiquated, it looks like it came from 1982 calendar. Everything they do is in Excel. None of it's particularly well done, but that's the crutch. That's the whole thing with, I know I can rearrange the size of the box, and I know I can type, and I know I can color the boxes. And if you can do that, it's almost like a combination of Paint and Microsoft Word with a calculator inside, and you can do wonderful things with that.
Yeah, that's exactly right. And to tie this back to my like Excel conversion, right? And then the two themes that I think are interesting, or more interesting, the two themes that are particularly interesting that I pulled out of this, I'll get to in a moment. But for me, so I built my initial like investment model and philosophy in Excel, you know, about 17 years ago, something like that, right? It was back when I was lost in a cave, like Plato, trying to find my allegory, and so it was very value investment focused.
Is this back when you were recommending Fifth Third to me? You're like, I don't want to admit that.
Is that?
But
yeah. But yeah,
Okay.
it was.
Okay.
It was. Anyway, so, well, I got to bring up Fifth Third at a time like this.
Sorry.
So I built it in Excel back then, and then even as I switched over to more of a long trend momentum philosophy, still in Excel. And at some point, I just hit like a capacity gap in Excel because I couldn't crunch the data, and so then I started coding it, right? And so now, similar as the unbundling, like I've built out like a homespun model that's programmed, right? Similar thing, and I just think it's really interesting. But Excel was the way to like play. Excel was the way to make that happen. Now, let me throw out two concepts that I think we can spin into other stuff that I pulled out of here that are related to one way that I think about investing, but we can relate it to other stuff. So one is there was this concept of the mental model inertia that came up in the article. And so this is a quote by this phenomenal user experience designer, which I can't remember their name right now. But there's great inertia in users' mental models. Stuff that people know well tends to stick, even when it's not helpful. Yes. This alone is surely an argument for being conservative and not coming up with new interaction styles, right? I think that that's awesome quote, and we can talk about that. The second is, are you familiar with the Lindy effect?
Ooh, vaguely. But you have to refresh my memory.
Yeah. So are you familiar with New York City?
Yes.
In New York, there used to be this place called Lindy's. It was at Times Square. And so you could see it if you were watching TRL back in the day. You could probably like see Lindy's in the background. Phenomenal cheesecake. Anyway, so Lindy's, there's someone I think decades ago wrote that basically like Lindy's will be around forever because Lindy's has been around forever. Just spoiler alert, Lindy's is no longer around. But the Lindy effect was a term that came out of that, and it's the idea that the longer something lasts, the longer it can be expected to last. So like if you've been around for 100 years, then most likely you're going to be around for another 100 years. Like that's kind of the Lindy effect, which I think is really interesting, right? And it made me think about a concept you've brought up before, although this doesn't talk about performance, it just talks about existence. But when you've brought up around mutual funds, so people will be like, oh, well, this has performed for the last 3 years, and so I'm going to buy into this mutual fund, and then it might not. Those two things together, this mental model inertia, where people like sticking to something that they know and feel like they can understand, even when maybe it's not great, and the concept that that if something has occurred historically or existed historically, most likely it will in the future. I thought were two interesting things I pulled out of the article that aren't even like pulled that out of an Excel context that I think are important to talk about.
Is the Lindy effect true or not?
The reason why a Lindy effect could be true are things like network effects, right? And quality are the two that are listed in this article. Like you have more experience, you can build more quality products. And if you've been around longer, in theory, maybe you have some kind of an edge, and you've been able to build network effects and user effects. So that's why you could be around. But I don't think it's necessarily true.
I read some research this week that talked about stocks that triple in value, right? And in a short period of time, I think it was in less than a year. And what actually happens in those cases is it's about a 50% chance that they triple in value again versus about a 50% chance that they get cut in half from that point. So at some point, I mean, when we talk about bubbles, but it almost ties to the Lindy effect. Like sometimes you just continue to perform regardless of if it's rational, or your brand staying power can take that next step even if it's not rational.
Yeah, there's a part of my like the philosophy behind my model that relies on a little bit of Lindy effect. It's not completely blind, like it's not like a blind trust of Lindy effect. But if you think about the two parts to it, there's the first part is, has this performed consistently over, I'll say, decent periods of time? And then the last piece is it like crushing it today? Right. And so that first part you could say has like, it's got a little bit of Lind going on, because it's saying like, I'm basically saying like there's some reason if you've consistently beaten the market over a material part of time, I'm going to say like there's a reason for it. And the blind faith, which I think like you and other fundamental folks could like completely rip apart, is like saying you really shouldn't look at that blindly. Like who knows why that could be? It could be for a variety of reasons. But I'm saying if you do that over a material period of time, like there's probably something. Like you have something going on that the market recognizes.
Sometimes it's hard to quantify, but there's something there.
There's something there. And the second part is momentum, right? And then the last bit you're also showing. So you show consistent like performance over time, and now you do on the crush in today, and I buy into that momentum. So there's like a little bit of Lindy there. I think as a blind high level concept, it probably isn't completely true, but it's an interesting mental model to have.
Agreed.
What do you think about that first point, the mental model inertia? Right. I'll spit it one more time. There's great inertia in users' mental model. Stuff that people know well tends to stick, even when it's not helpful. I'll just say out that first part. What's your reaction to that?
I love it. I mean, it's really, really wise. I actually tie it back to what I was just talking about. The person that their inertia relates to, they learned how to use Excel once, and now they think Excel is the tool to do everything in. But that's the brilliance of Excel. Like, it's not intimidating. It's you have your non-technical people who can get comfortable with it and use it. And so I'm trying to think of other examples, but this is a really wise quote. I'm a fan.
I think it happens in everyday life
Oh no,
too,
it absolutely
right?
does.
It's like the thing that feels comfortable or that I recognize, I'm going to go with, right? There was a phenomenal quote. I'm going to call this a phenomenal quote from a non-famous person, but it was just a colleague that I had about 12 years ago or so, right? That was talking about some actions that our company was taking at the time. And the way they said it was, they were like, it's as if we're looking in the house for the keys, even though we know they're in the garage because the lights are on in the house. Right. And it was what he was referring to was basically like there was data that was making something obvious that we should take an action, but that action had discomfort. And so we did the thing that we
Yeah.
normally did. But I just loved that quote. It's like, just because the lights are on, we're looking in the house, but we know the keys are in the garage. So like
Yeah.
and you can only do that for so long. But I think people do that kind of stuff all the time. Like, I'm used to it. I'm just going to keep doing it. You've talked about, was it last week when you said, I'm not gonna, I didn't trade last week and I'm not gonna trade next week, right? We're throwing out
Yeah.
ideas, but it's not right. And I think that like boring approach, right, which many successful investors have talked about, or right, a lot, is like, this stuff is boring. If you do this stuff well, like, it's actually boring
Super
over a long
boring.
period of time.
Yeah.
People know that. Like that you should buy broad market funds and be passive generally, right? Like,
Mhm.
this stuff, but game stonk, but AMC, like, whatever. So I think it happens all the time.
It's like human coping mechanisms. It's like, this worked for me in the past, so it makes sense for me to continue to do it in the future. It could be hunting and gathering for food. Like, I know that I've been on the trail of this fox for 2 days, but I know last time I just didn't give up, and I eventually found a way to get the fox, and that fulfilled my needs.
Yeah, there's an article from this week that's called "Avoiding Bad Decisions,"
I love
and
that one.
yeah, it's to give the high level like points. There were 5 of them that the article said about why we make bad decisions. Is one, we're unintentionally stupid, which often comes with warning signs of we're tired, we're being emotional, we're in a rush, or we're distracted, or we're operating in a group or working with an authority figure. Second is we solve the wrong problem. That one I think is huge. I see that all the time,
Well,
right?
that's your lights on in the house problem too.
Exactly. Third is we use incorrect or insufficient information, which sometimes comes because we're hearing this second, third, fourth hand, right? Someone spoke to someone who spoke to someone who spoke to someone, right? And then second, we're just like reading about it in mass media and assuming that headline is facts without going into like depth. Fourth is we fail to learn, which is huge. And then fifth is we focus on optics over outcomes. I think all these are great points, and I found this on Farnham Street.
Farnham Street, great.
Yeah, which is great. But I think those two things are connected and really interesting.
This reminds me of the famous Munger quote of, just tell me where I'm going to die so I cannot go there. Like,
Yeah.
sometimes you should think about avoiding bad with more passion than you think about seeking good. And I thought that was great, Reed. We should put that out on the Twitter feed as well.
Or Parler or wherever we end up.
since everyone hates Twitter. Let me rant about that a little bit. There's such a good investing community on Twitter that it's become my default thing, but I had forgotten for a quick second that basically I don't know, 60% of the world probably doesn't even use Twitter. Maybe more than that, 70%.
I don't the social medias. is like not my world. I don't. I'm old fogalicious when it comes to social media.
Don't worry, we're gonna hire a college intern. They're gonna handle our
Something.
socials. It's gonna be so awesome.